Okay, the purpose of this video is to give you guys more tools because there just aren't enough resources out there and people sharing these things. And I know when I started investing, I didn't know that there were all these tools at my disposal. And so the compound calculator, the big one, that I give to you at the beginning of the course is my favorite calculator because it's the one where, it really gets you into seeing the magic of compounding. And that to me was the thing that really surprised me. It shocked me to know that if I put my money, away into this holding container, that interest, this magical thing, could come in and add more money. It's money, my money making money, basically. That got me really excited. Now, I want you to have more calculators at your disposal. So definitely you can go to the investor.gov website. They have other calculators there that you can play with. And then in this lesson, I've included a bunch of links. You just click on the bold word, and it will take you to all of these different calculators that you have available to you. So I'm going to share my screen and show you the bank rate calculator really quickly so that you can get an idea of how this works. And so this is basically just an investment goal calculator. It helps you to see how much you can build over time. So you're going to put in some inputs here. You can start with what your goal is. This doesn't matter so much because the calculator is going to show you, you know, basically like what you can make. But it will compare what you can make to your goal. So it's like, okay, can I hit my goal in 10 years? That's really nice to see, right? So let's say that you have an investment goal of 100,000 to get started, and you know that you have 10 years to save up, or to put money into an investment. And how much do you want to initially invest? Let's say you have 50,000 to start. And what your expected rate of return is, you're going to have to guess on this. Now, usually the index funds that we're recommending in this course, for you to get started with, these are and these are just recommendations, right? They're not, in any way am I making a guarantee on any type of rate here. This normally, you'll see like a 10% return on index funds. Now, 8% is a more safe number, um, just because you're, showing like there's going to be down years, and maybe you will end up trying to time the market. We're hoping you don't do that because you're watching this course. But let's go really low. Let's just stick with 7, percent as the number for the rate of return. And I'll show you, we'll go up to 10 just to show you the difference in this video. How often you'll be contributing monthly, and how much will your contribution be? Let's say you have 1,000 a month to contribute. Okay, over 10 years is what we selected. So when you hit calculate, it's going to bring up what you would make in that 10-year time with 50,000 to start at 7%, investing 1,000 a month. This is, you're going to end up making 264,000. So you actually went way past your goal. You exceeded it, by double, more than double. So you can see this in chart form, which is really fun. You know, it helps you to see the difference, right? And the green lines are for ta if you add in taxes. And so you still met your goal, even with it being taxable years for you. Now, let's change this to 10%, just so you can see, you know, if you were to invest in index funds and you were doing fairly well with them, let's calculate it and see what the difference is. And it jumps to 320,000, right? So this is really great to see. Now, this is just for 10 years. That's a short period of time. Let's say you have 20 years to invest. And let's say that you start with zero, okay? And you get about 10%, and let's say you're investing 1,000 a month. So let's start with the lower number, like you starting from scratch. You're starting from zero. Over 20 years, you would build up to 687,000. Okay. So as you can see, having a longer period of time, going from 10 to 20 years, you more than double your fund, and you you probably, I'm not going to guarantee it, but like seeing this rate of return of 10% over a long period of time, that tends to be a pretty good average. Even if we take it down, let's say we take it down to 8% and we run these numbers, you can see that you would make 549,000. So it's below the 600 and, 50,000 mark, but you're still making almost 550,000. That's pretty good, even with an 8% return. Now, remember, this is more like if you're investing in, say, index funds. With stocks, at some point you might be able to improve your returns. We do go over that in this course, that you can at some point start investing in things that you're being more intentional about. Maybe you're watching the market more, you're doing a little bit better. Maybe you're even doing research on the funds, like let's say some of the index funds, and you're starting to see some of them perform better than others. And maybe you're able to get your rate of return to go up and to say 12%. So let's calculate where you go with that. There you go, getting into closer range to your $1 million mark. You're 864,000 now. Okay, so as you can see, and the way to really, I would say, maximize this contribution amount, if you're able to go up in contribution, or if you're able to contribute more sooner, okay? Because if you're able to get more in sooner, that amount has a longer period of time to compound, which will work really well in your benefit. So let's say that you were able to contribute 2,000 per month over 20 years and you were getting around 12%. Then you're well above your $1 million mark. Okay. So the nice thing with this is you could play with this and see if you're able to get like closer and closer to your goal. That's really what I want you to see with this calculator is like once you know what you need to be hitting, it's just going to help you get to your goal even faster. Okay. So I just wanted to share that with you and share all these calculators with you so that you can utilize them. All right. Thanks so much for watching this video.